Welcome to the 40 Finance channel. If you're a fan of Tom Lee from Fundstrat, then you're likely familiar with his Granny Shots ETF that he's put together, which is supposed to represent what he thinks are some of the easiest buys to make at the time. And this, of course, is a managed ETF where all of the picks are made individually. It doesn't really follow like a formula like the QQQ does. But it's an interesting list, regardless of what you think about Tom Lee or any other analyst for that matter. Going through these holdings is just something to kind of take in. It never hurts to take a look at someone's list of potential high upside stocks. And it's not just all technology on here. In fact, he has quite a few with healthcare, financials, and even industrials you'll see on this list. But the point of this video is not to go through this full list here, but rather pick out a couple names that a lot of folks have been talking about. We had a nice little bump in the stock market this week as kind of the tariff fears, if you will, evaporated. So the question now becomes, did you miss out on the bottom? A lot of people are focused on getting in at the rock bottom of stocks. I would suggest that you're much better off maybe not buying your full lot at once, but spreading it out over time, aka dollar cost averaging. But what I want to call out here today is there's a few popular picks from the Granny Shots portfolio that still seem to have quite a bit of room to run. So you didn't miss the bottom on these four names that I'm going to cover today, and they are Google, AMD, NVIDIA, and I'm even throwing in SMCI here, Super Microcomputer Incorporated. But the point here is to look at the momentum indicators as well as the fundamentals to show you that if you believe in these stocks, you have not. You have not missed the upside, at least in my opinion. I don't know if that upside is going to be tomorrow. I don't know if it reaches its full potential in, say, 9 months, 12 months, whatever. But as far as is this a good time to make additional purchases at this price, well, there's a lot of metrics that say yes. As we go along here today, you'll see a lot of shots from Seeking Alpha Premium. If you are interested in a 7-day free trial of this platform, as well as some money off on your first full year, check out my affiliate link in the description, potentially support my channel in the process. Thank you to everyone for your support. Now, what I've put together here is just a quick stock comparison. This is YT for YouTube. YouTube stock comparison. It's a template that, I switch these names out depending on what I'm talking about. And the stock comparison tool is handy. Usually you use it with names that would maybe be in the same sector or sort of have a theme. I would say these four names I just kind of picked more randomly because they're bigger names. But if you think about Google, AMD, and NVIDIA, at least, you're talking about some of the top companies in the QQQ. And then I just sort of threw SMCI in there just because it's an interesting name coming out of some accounting red flags that they have. Now they seem to be a little bit more on stable ground. But just like the other names, there's always the tariffs and how that world materializes. SMCI also relies very heavily on CapEx spending from large corporations. So, some of that stuff's in doubt right now as we think about the changing landscape of the economy. But for today, I'm highlighting reasons that there's more room to run in all of these. And you see this graph here just sort of highlights all the names. You do have the downturn that the entire market has seen. Let's just say around Valentine's Day, all of these have dripped down, each in their own individual ways. And all of them on Seeking Alpha, at least from the quant score, have holds. But when you switch to human analysts, you have buys for most of them, with the exception of Wall Street on SMCI. Now, the thing that I'm focused on right now is where are these prices, even outside of the valuation. Just thinking solely about price here for a second, and even after the recent run-up that we've had in the market this week, Year-to-date return, all of these are down except for SMCI. That's not super surprising because, they got through an accounting deadline that was weighing on investors. But if you look at NVIDIA, AMD, and Google, all of them are at least 13% down year to date. But interestingly enough, if we flip over to sort of a fundamental factor and we talk about the growth of the top and bottom line, so the growth of the EPS line and the growth of the revenue line looking forward, obviously based on projections, but it is interesting to note that you've got double digits across the board for all four of these stocks. And heck, NVIDIA and SMCI, they're plus 50% on projected revenue growth. Then if we switch over to the bottom line, so what is the EPS growth projected to be for all four of these? The lowest one is Google at plus 20%. Then you have plus 31%. I think that was for AMD, 60% for NVIDIA, and even SMCI, if you believe it, plus 45%. So these are four names right now that, despite being down year to date, still are showing great growth at the top and bottom line. And those are the levers that, typically you need to pull or to show evidence of growth in order for the valuation of your stock to go up. Now we'll go into these stocks individually, and I'll show you a few momentum factors for each one that at least say to me that whether or not the bottom is in on something like a Google, there's still plenty of upside to be had from here. So Google's actually up almost 2% today. They had a great earnings call yesterday. Not a lot of red flags in there, and I think most of the headlines were positive for Google. But if we go down here to the moving averages and we talk about the 50-day and the 200-day, and the fact that you can have these death crosses, right, where the 50-day goes under the 200-day, well, Google is still in that world. So their 50-day is 166, all right? Their 200-day is 174. So that would be an indicator of a potential bottom or a bottom mean occurring. Well, the news from yesterday isn't going to recover that sentiment super quickly. So there could be an opportunity here just on momentum alone and knowing that the growth fundamentals are strong to pick up some shares of Google even at its current price after the good news has already been priced in. And if you're wondering, well, what do I have to get out of death cross mode? You'd need a price, at least today, on today's 200-day simple moving average, that is 174. So you'd need to get to a price of about 175 to really say, okay, this is crossed back up. All right, how about AMD? Same thing for them. Let's go down and check out their averages. 50-day simple moving average is 100. Their 200-day is 131. And AMD passed into the old death cross territory quite some time ago because they had some challenges of their own coming out with a big negative earnings report. It was either at the end of last year or the start of this year. But if you want to say to yourself, well, the run up has already happened, if you can say that, at its current price of, what is it, 95? Yeah, $95. If you want to say you missed it already, well, I would argue that the 200-day is at 130. So this one still has an opportunity at some point down the road. And we saw their growth metrics. We saw top and bottom line are growing. So this one still has a momentum lever if they ever pull out. So if they get to $132, is that going to happen tomorrow? No, it is not. Almost for sure, you're not going to see that. But what happens by November or December? Regardless of the timeline, I would say you would likely be kicking yourself if you gave up on AMD because you missed it at, say, $80. You said, well, it's already made its run. Not if you are going to hold this one for, certainly 2 to 5 years. I can't imagine that you've missed a substantial run up at this point. All right, next up we got NVIDIA coming in at 109. It is actually up plus 2.5% today. Continues to get good headlines. A lot of people questioning the downturn in NVIDIA. Yes, you could say it was overpriced, but we talked about those growth metrics, particularly on the EPS line. It is not going to grow as much as it did last year because it had 100% EPS growth last year. This year, projections about 60 plus, but that's still miles above what you see from other companies. So right now on NVIDIA, 50-day is 115, 200 days 125. So here we go again. This is another stock that is in so-called death cross territory, and we don't know when it's going to recover. But I feel pretty good that NVIDIA will recover. And if you're going to have it when it gets its next run up, well, you're probably going to need to be peppering in some buys while it sits here now at 108. All right, last one just for fun is Super Microcomputer. I did a video on this one back in late fall, maybe it was Christmas time or something. This one's not as simple as your NVIDIA. Like this, there's a little more to this bet than just saying that they will probably go up. You have to wonder about the CapEx spending from companies that actually drive the bottom line for SMCI, but it is a very intriguing stock, and I do encourage you to read some more about the story on Seeking Alpha or any other analyst for that matter. But if we go to 200-day, 43, 50-day right now is 39. So you're easily into your death cross. The question is, when can it get out of it? It doesn't have much further to go. So $43, today you're at 35, and it's actually taken a step back. I encourage you to read as much as you can. I'm not saying buy SMCI just because it's in the death cross. It's a lot of conversation for this one on the internet, a lot of analysis. Some people believe the accounting things are in the past. Some people believe that it's going to be a bad environment for them to pop right back up. So by all means, if I was going to pick the easiest of these four, I would have to lean towards NVIDIA based on its past performance. But I think in all of them, there is opportunity for the right investor. All right, guys, so those are four names, and I see this on Twitter a lot where people are like, you missed the bottom. Missed the bottom on AMD. You missed the bottom on Google. They just had a good earnings report. I definitely disagree with that statement. And I think when you look at just sheer momentum, and if you're into it for a longer time period, 1, 2, 5 years, I don't see any reason why getting in at these current price points won't pay off in the future. Hey, before you go, don't forget to check out that special offer for Seeking Alpha Premium down below. I hope everybody's doing well. We'll see you on the next video.